Hi, Mark Rogers here. It is Safe Money Matters. It is news that's coming up on deck, and I keep an eye open for news that is interesting and may impact your retirement. I've got an interesting thing that just came across, has to do with taxes. We just got done with taxes here a little while ago, and the taxes, income taxes in retirement is going to be a big deal. I've been saying this for years. If you've been watching and listening to me, I've been talking about we've got 2 more years, this year and next year, and then there's this sunsetting of this tax rate that we're in right now, highly likely to be changed and go up at sunsetting. So I want to share with you something that came across my desk here about wealthy people. They have to pay income taxes too, but they've got ways to maneuver around it. And those of us that are not so wealthy, have we thought about utilizing some of this type of taxes? So let's take a quick peek at this right now. So let's go ahead and show. I'm bringing up on the screen here. I want to bring up this piece right here that basically is coming out from the Financial Advisor website, and I'm just going to make it easier to the screen there. Should wealthy clients use home equity to reduce taxes? Now, a lot of people go, well, I my house is paid off, Mark. I don't know about you. I don't know about that. Well, let me share with you something interesting. There's reasons to look at your home equity, and I don't even do this stuff, right? I always disclaimer this. I don't do any of this. I just say keep an open mind, because this actually could be putting people in a better position to effectively use their home equity. All right. Home equity is traditionally used for familiar costs such as home repair, education, debt cancellation, but wealthy clients have the option to use such assets to reduce taxes. Advisors say it may carry a price for tax savings. So if we've saved into the IRA 401k for all these years, now in retirement, we're figuring out, well, how do I unwind this here? How do I unwind this and not have to be struck with all the income taxes that are going on? Because that's what's going on is when we have those large IRAs, 401ks, when I say large, I'm talking 500,000, 800,000, a million, $1.5 million. We have to unwind those things, and all of that is going to be subject to income taxes, okay? And if you think that income taxes are going to be lower in the future, keep doing what you're doing. If you think income taxes are going to be higher because of the fact that we're at $4 trillion in debt in this country, then maybe home equity might be a way to position this to kind of alleviate some of those taxes. So let's get back into the article. One strategy focuses on using home equity loan to pay the taxes generated by converting an IRA to a Roth IRA. See, many people in retirement don't understand that this is a possibility now. Some rules and regulations have opened up, allowing us to put it into a Roth. Considerations for this strategy include comparing the mortgage interest rates and anticipated home appreciation against the projected growth of income tax-free Roth assets and whether the client may subject to be a higher tax bracket in the future. All these things have to be in consideration. Again, it is something that you cannot do solo. You have to have the analysis. You have to have the numbers figuring out, is this type of strategy worth it or not, right? We always got to figure out, is this worth it or not? And so numbers are important to have, all right? And so getting back into it here, another tax advantaged option for home equity is using the money for gifting before the TCJA, Tax and Change Job Acts. That's what I was talking about earlier, is you have to be understanding that Congress is making rules. Think about this. Congress is making rules that is changing and affecting your retirement, and you kind of have to be on it, or you're just plugged in. I'm happy to do education. I bring other advisors in to talk about this, but we have to understand these Congress rules that are changing. We had Secure Act 1.0. We have now Secure Act 2.0. Who knows what else is coming down the pike with regards to changes to your 401k, IRA, 403b, etc. Okay, so let's just finish this off here. About gifts could be an interesting way to do it. It says a wealthy client could use the home equity loan or reverse mortgage and gift the proceeds with no tax liability until the gift exceeded the current exemption limit. Now that is an interesting play. That is an interesting play for that, to utilize home equity to sustain and live on and just be able to gift out the stuff along the way. Now, I go back to this. I go back to, is that why you built up the 401k, the IRA? It generally is to be able to live in retirement, but some people figure out, now the income taxes are going up. And here's the other thing too, little secret, is when one spouse passes away, you lose a tax deduction. It's a problem. It's a problem. So be very cognizant of how to manage these IRAs, 401ks. And this article here in Financial Advisor is mentioning about the opportunity for home equity line of credit or a reverse mortgage, which is tax-free. And that could be some ways to help it out. And again, it takes into accountability that you have to have some strong analysis done on it. They are highly regulated. I have, Mark, I don't want to talk about reverse mortgage. I don't do reverse mortgages, okay? But I've analyzed them, and they do have their place. They do have their role. And for wealthy folks, this is an interesting play. For folks that we're just making ends meet, there's an interesting play there as well, okay? So I hope that kind of helps, interesting enough to open our eyes to say, there's a tool that we could be able to use in the future to reduce our taxes and keep us from really getting stroked hard on these taxes that are going to be coming out of our IRA, 403b, 401k, that type of thing, okay? All righty. Well, very good. Mark Rogers here, and I am just going to bow out here, and you're always welcome to ping me on the channel, ask your questions, like, subscribe, and share. Safe Money Matters over on Facebook and YouTube. And with that, we'll catch you soon on this.